Yo, what's going on, everybody? It's your boy MC Fire.
And Ice Cube.
We are here with another video, bringing you some what is it? The trading recap for the week. Super excited because I think our mic works now. Sorry.
I know, we fixed it.
Yeah, some of the audios looking a little rough, man. But yeah,
Sorry.
rough like my beard. But yeah, sorry.
Stop yelling at them.
I'm sorry. I'm just happy that they're gonna hear me yelling. They're gonna be like super geeked about that. But yeah, we definitely want to bring you guys what we've been doing for the past week. Kind of just in a recap. If you guys have been tracking the channel, you already know we're trying to go through training so that we can potentially get locked on to a prop firm. We actually went to apply to a prop firm. Come to find out that prop firm, it only host in England. So we were like, oh man,
Dang it.
we gotta find another one. That's the one we really wanted to.
So we'll figure it out because like what I was talking about with why I stopped trying to get into Forex, because a lot of the regulators don't service to the United States. It's kind of the issue that we're having, trying to find a prop firm that services to the United States now.
Yeah, we definitely need to find one of those guys that will give us a good rate and doesn't cost too much. Each of these challenges, most of the challenges, you're either going to have to be with that prop firm for like 6 months to a year and they train you up. Meanwhile, that time, hopefully they're paying you, but most of them they don't. Or you're just going to have to pay for the honor of doing the challenge. And then if you pass the challenge, you get funded. And if you don't pass the challenge, then you get the honor of paying again to do the challenge.
Yay.
Again, yes. It can be.
That doesn't sound fun.
Yeah, well, I mean it's funding, so funding's fun. But
I guess.
yeah, like you would have to pay to be able to do that. And the reality is we only want to pay like one time. So we want to test the system, be good at it, get our risk management, our trade setups down, see if we can grow the account, and move on from there.
Yes.
So let's dive right into the video. Yeah. So what are we looking at, Q?
All right, so we are looking at the trend system. I believe that's what it's called. The trend system layout that we were trying to use for the challenge. So what happened today? Where's my mouse? Oh, there it is.
There it is.
There it is.
Hi.
Okay. So it looks like the market has just been choppy. Let me see. I'm gonna bring this back. Bring it back, bring it back, bring it back.
Nice.
Wow. Let me see. Can I condense that a little bit?
Yeah. You can press that circle icon, that backwards circle, that one right there, and it'll take you back to kind of where the price action was.
Oh, where is my... Okay.
Yeah. Sorry, guys. This doesn't happen except for when we're showing it to you.
I
That's
swear.
the only time we have technical delay. Actually, do this. Click that guy, and then just use him.
Okay.
Just type in Meta.
I don't know what's going on with Meta.
Yeah.
Okay, hold on. Going to Meta. Alright, so Meta seems to have started out the gate just dumping.
There you go. That's
There we go.
flawless, yeah.
Wow. Alright, so it did a fake out like, hey, look, I'm gonna go up. And it's like, psych, going down.
Yeah.
So it went down. I gave a red signal here about a trend change. And then it was like, wait, no, I'm gonna go up for real. And did another trend change to blue. Went up. And then it was like, haha, psych, boom, going down. And then just like took off to the downside.
Yeah. Pretty much all day. Leveled out.
Remember, we want to make sure that this trend validator also matches the trend of the market. So if this is red, it turned red. If this is blue, I don't want to take that. And it's just following the rules. So of course we would have been like, oh, I mean, it's red, so let's sell. But because we're trying to follow rules and get comfortable following the rules, even if it doesn't, it goes in the right direction, you could have made profit on this trade for sure. But we didn't because we're trying to follow rules. So
Yeah, gotta follow all the rules.
exactly, and that's just a lesson to traders that are beginning. So beginner traders, when you put rules in play, make sure that you follow those rules, even if something like this was to happen where you could have made money on this trade if you didn't follow your rules. You're still trying to get into that mindset of, hey, my rule says this. If this hits the condition, I'm gonna make sure I follow those. So just a little nudge to listen to yourself.
Yeah, what about Novo?
Novo.
Top right,
Going
yeah.
up. I was about to go to JP Morgan.
Oh, there's nothing that happened on JP.
So why is it open?
Just kidding. There actually did something happen
Alright.
on JP, but I'll break down JP.
Okay. So with Novo, out the gate, it was just sideways. It threw a couple of triggers, but nothing that gave us the indignation. Nothing from our rules that said we were to get in. It never went above during this blue. And then for the red, the trend validator was not matching, so we didn't do it. Yeah, it just chopped around sideways. We did take a play here. Did you take that here?
Yeah, so
Okay.
so the first one, I did take that, and then the second, not the in the last blue, I did take it. So there was two trades there. One was a stop out, and the other one actually hit
we can
our
see.
take profit.
Yep. So he got in here just to kind of give you a explanation on what happened. So he got in here where it went. Sorry, it just keeps. He got in here when it went above this previous candle of the trend change. Once he got in, it had a trend change of red here, which is why this big red arrow's here, and that was his signal to get out. That's what the rules say. So he got out for a very, very small stop out. Then coming, and also it was at your rotation,
Yeah,
your
it was at
bottom
the
rotation level.
Stop loss level anyway.
Yep. So double reason to get out, which was
Wham!
good because he would have lost all this if he would have let it go. Anyways, he did get a blue here, which it did not fulfill the requirements for us to get in, so he didn't take that trade there. And then going into this next blue trend change, he was able to get in here because it went above that high of the previous candle that caused the trend change, and then took that, it kind of went sideways, and then boom, it hit our profit.
Right. So we took a 2-to-1 for price action.
And you can see that here where it says the 2, so 2-to-1.
And then as it exploded, we went on and took it off after it made that move, because the rest of the market was moving relatively sideways. So shout outs to us for just following the rules, and you can see following the rules for us worked starting out.
And it's a good thing too that you took that off, because if you would have let that stay, then you would have lost all that
All
profit.
that profit, yeah.
So really good following your rules. We did Qualcomm. No, we did Meta.
Yeah,
did Meta.
we gotta go through Qualcomm.
Qualcomm. Let's see what happened in Qualcomm. Okay, so out the gate, it was straight to the downside. Boom. And then it recovered a little bit. And then, recovered a lot of it. And then we got a trend change here with the blue candle here. So waiting for that to go above the high of this candle, which it did. So it triggered us to get into that trade. So from here, this was a possible 2-to-1 ratio, 2-to-1 risk reward. It goes up, kind of levels out here, then it starts to go back down. We get a trend change here. Boop. Did you get out at the trend change?
No, I didn't get out immediately at the trend change. But the second one I did, because I wanted to give it some room to run. I was okay with it stopping us out if it actually went to the stop. But after the second trend changed, I just said nope. It's going half and half, so it could go up, could go down. I took it off after the second red arrow.
Gotcha. All right. So we took it off right about here.
Yeah.
Is that right?
Yeah.
Okay. Yep. Which is about the same level that we would have took it off if it would have. We took it off at that first trend change. So good there. So another small loss.
It happens.
Which is good, because what if you would have left that on and it would have continued to go down here? It would have stopped you out, of course, but if you would have said, hey, maybe it's going to go up. Let me see if it goes up. I have the rest of the day. What was it? It was like 9 o'clock, 10 o'clock in the morning.
Yeah.
So you still have a couple hours. Let's see what happens. And then boom, you get all of this.
Yeah, you took the full loss on that, and we're selling premium, and it's Friday, so selling premium on Friday, which means the theta decay is actually pretty high. So if it doesn't go, you might as well let it go.
Yep. People don't want to let their trades go because they're like, oh, I'm gonna lose money, or what if it goes in my direction? But very rarely does that happen. People tend to lose more money in this game because they don't listen to their
rules.
Yeah, listen to their rules, or even just listen to the market. The market says, I want to go down, and they're like, nah, you're gonna go up. And they're like,
I want you to start blowing on the chart like that's not how that works, you know?
Right.
You have to follow the rules, follow your mentor's rules, stuff like that. So.
And then you said you wanted to go through JP Morgan?
No, like it pretty much, so like go back, so in the morning it gave a pretty straightforward like sell signal on the day. That would have been the best one.
Oh wow, yeah. And it was the validator was red too.
Right. In the morning though, we had some technical difficulties, and I didn't want to like rush that. I wanted to just get set up. I didn't want to try to kind of bulk that trade. So I wanted to like check levels and stuff like that. But there were some technical difficulties on the first on the computer, then on Thinkorswim there, and that trade happened relatively quick. So the pre-market, the pre-market, it was out the gate. Now there was, I'll go back real quick. There was an opportunity to right there. You tell them right there. Okay, so right there, even when I was looking at it, I was like, well, that's at the same level that I potentially would have got in if. Had the technical, had the video worked, I was showcasing that on the Thinkorswim that there was a VWAP level there, and it was bouncing on VWAP pretty good, and the risk to reward would have been pretty okay.
We got a fire on QCOM.
Yeah, fire on QCOM. So we can check it out real quick. They're still after market trading, so there's still triggers going off, guys. So that's why you get that alert. People, someone's buying it. So we're not. But yeah, JP Morgan actually would have worked out really good in our favor, but the close would have been like really tight. So if you didn't get like the perfect entry, you wouldn't have got that full premium, right? Your strikes would have had to been perfect, your entry would have been perfect.
So what you're saying is you should have been ready to open here? Yeah,
so if I didn't open, because a lot of that is pre-market, and I'm gonna show you guys on the other one what I'm talking about, and it's gonna make a lot more sense. Okay, we're gonna go. You're gonna have to switch. I will. I got it.
Okay. I was like, they can't see what you're doing. Hold up.
There you go. So here, out the gate, this is on a 2-minute chart. For JP Morgan, still JP Morgan 2-minute chart. So what I really want to highlight is this candle right here, that 197 level on this side of the house, just to get our levels right, is mainly pre-market. Okay, over here, this level is mainly pre-market data until it hits that 196. So that 196 level doesn't come into play. We can actually execute a trade so your trigger candle, what I'm saying is your trigger candle isn't actually in play. it's this next candle that's actually in play at like 196.
Right.
That candle is actually in play, and you'll see that here. The pre-market data is saying yes, your pre-market candle at 196.9 isn't actually in play. Your trigger candle here. So unless you get in right at the entry, by the time this thing runs to 196.28, it's already, the move is already kind of taking place. And that happens in the span of 4 minutes. So within 4 minutes, this play is already done. You almost had to be on the open with the trade already set up, because if you didn't, right, this play almost gets away from you. You'll see it. This is basically where your entry is, and it gets into the danger zone right here. Ends up coming out to be in a like knife edge profitability. I'm talking about knife edge profitability. If this is your entry, this is your take profit. So even if you pick like an out of the money strike, you would have lost on that trade, right? Because you would have had a very wide stop loss, which means you had a wide take profit. So you almost had to be knife edge. So yes, it looks like an amazing trade, but like practical application and with technical difficulties, it wasn't going to be the best trade for us in hindsight. I had to go over that because it looks good. And you're like, why did you take that trade? Well, because there's a lot of factors, but yeah, we took the ones that we could. So the 2 losses were minimal, and the Novo trade, was a standard 2-to-1 risk to reward. So yeah, not too bad, not too bad. Some days are gonna be like that. The market's gonna be choppy. It's not always gonna give you everything you want. So, what do you think? You think we're doing good?
Yeah, it's like 2 losses, 1 win. That's pretty good, especially starting off with a whole new trading strategy. So
yeah. Good. And the last trade from Qualcomm that we took, so you guys can see it, was actually really, really good. I really like the system because it kind of showcases its potential. Let's say not on that day, but right here. So
yeah. I remember that.
Yeah, we took this play. I think it moved a little bit. Oh, we took 2 plays. Oh crap! I just moved it. Great.
Hey.
Yeah, not touch.
Moving stuff.
Not touch. Right. So this first play on Qualcomm was actually it ended up being a loser. With the second play was a massive winner for us.
Yay.
So let's say you take this play and you get a nice juicy stop out, right? Or not juicy, but you get a very I'm thinking about the winner.
A very juicy stop out.
It's a juicy stop out, right?
Oh no.
We're gonna call that. That might be a catchphrase on this channel for sure. But then you get something like this, which is a double blue trigger, right? You get another shot at it, and it actually pushes. We held that all the way until the open of the next day. So really, this play ended up being a little bit more. About right there. I think I moved it. So this is about where it hit. And we went on and let it go at the open. We call all that plus the overnight decay to give us a very nice, juicy winner, not stop out.
Yay, following the rules, right?
Yeah. And it's like almost a 4-to-1 risk to reward on that beautiful play. And what's so crazy is we let it go, and had it changed trend, we would have let it go at the same spot anyway. So yeah, I'm impressed. I'm very impressed with the system, and we have Q to thank for showing me how it works. So I'm like, yo, that is pretty sweet. But yeah, it's those are the plays recap for the week. Anything else you want to blast you? We're gonna probably do a separate video for a total recap of the market for the week and what's coming down the pipe. We have a petrodollar video. I don't know if you guys know, but Saudi Arabia just released the dollar from being the currency that will trade primarily for its oil.
So what does that mean?
That means, yeah, great question. So what that means is typically every nation around the earth uses primarily dollars to trade oil in. Every country really needs oil for its economy, and that oil must be purchased in dollars. So if let's say for example, your economy, right? You have an economy, and you need to purchase something you need to purchase oil for your economy to run. If you only have, let's say for your country, your currency is, you guys deal in Qs, okay? You guys only buy and sell in Qs, and I buy and sell in MCs. We would both have to acquire dollars before we buy oil. Okay. So that there's an exchange that happens between nations and between the United States. It has to go, you have to basically check in with the United States, acquire their currency, right, against your currency, and then buy oil. Okay, so it's the forex market is in play as well. It seems confusing, but it's really not. You basically just have to acquire enough American dollars to purchase oil. What Saudi Arabia did is say, we will no longer deal in dollars, so nations don't necessarily have to go check in with America, buy American dollars before they can trade. If Saudi Arabia decides to trade in the yuan or the rupee, for example, for India or China, then they can have bilateral trade agreements, meaning they will take each other's currency for trade. Now, why is that important? That it's important because that means the dollars that are around around the globe, if other nations don't have to use the dollar to transact for oil, they will send them basically back to America, right? And that can be good and it can be bad for a couple of things. For one, right, if that nation decides to go back on using the petrodollar, there's going to be an imbalance. They're going to not have enough dollars because they're offloading those dollars. How that affects you back home is if it happens too quickly, then we get inflation in America. And how that works is here locally in the United States, we basically export our dollars so that people can buy, we export our dollars to get commodities. If the nation doesn't have enough dollars, they can't buy commodities. They can't buy oil, right? So they need to transact in dollars. But if they don't need that, they're going to send their dollars essentially back to the United States. If you know anything about supply and demand, the more something is in supply, the cheaper the price. So the more valuable your dollar is in its scarcity. So if there's more dollars that are coming back to America, there's a greater supply. Your buying power actually diminishes. That is what's really the crux of it. And if China and India, right, the world's second largest economy, decide to not use dollars, that's a lot of dollars that could potentially come back to the United States, where they don't have to use to buy the lifeline of their economies, oil. It is a big deal. There are some things that you can do to protect yourself. One of the things that you could do to fight inflation, save your purchasing power. Historically, gold and silver has been the best thing to protect your purchasing power. And for some of you guys out there, Bitcoin is another way that you can protect your purchasing power. There's been many videos kind of done on what happens during these time periods, but typically gold and silver have been the safe havens. Bonds, they are some of the safest instruments out there. Basically how it works is as long as the country of origin of the bond still exists, you can get a decent fee, right, for the bond. But the reality is it might be nominal compared to how the market's actually moving. So you could be losing money with the bond, getting it locked in at whatever the rate is, whether it's 5 or 7% now. But yeah, it's kind of a big deal, and I hope with this channel you guys gain value from that, because that's kind of a big deal.
I have a question.
Sure.
So is Saudi Arabia not doing business with the United States anymore? So can we not buy oil anymore?
Great question. So most people probably don't know this because the U.S. doesn't really make it a big to do. But for us, we produce a lot. We're like the number one oil producer globally. Most people don't understand that. We don't have the biggest reserves, but we do produce a lot of oil, right? Saudi Arabia also produces a lot of oil, but when you think about where Saudi Arabia is compared to where we are, Saudi Arabia provides a lot of oil is a lot closer to India and China. So as an oil producer, they're perfect for providing Europe oil, India, and China oil. They're like right in the middle of everything. Whereas America, we can provide a lot of oil between ourselves, right? And maybe our South American partners. Canada is also another really big oil producer and natural gas producer. So why, to answer your question, does that mean we stop like trading with them? Not necessarily, but it does mean that Saudi Arabia is making a very hard stance and basically telling America, through so many financial and political channels, there's something that we don't like that you're doing, and it's more beneficial for us to go our own way and deal with these other countries because there's something that we don't like that you're doing, or we don't like the financial footing that you're on, and we would detach from the dollar, essentially. Does this change as our status as a reserve currency? No, it doesn't change as of right now. Most everything else most other nations still buy, oil in dollars, but Saudi Arabia and the United States, the relations have definitely soured because of this, for sure, for sure. But yeah, I mean, it's just a sign of the times, really. Sign of the times. So that's basically Fireside News for what's going on in the world, and we'll give you a market breakdown overall of what's going on with the other ETFs and what does that mean for your money. But we could actually take a look at what the U.S. oil did. So the auto trend system is pretty cool for that. So if you notice, U.S. oil out the gate kind of took a little bit of a dive here. We can actually go to the 1 hour chart and look. So it was trading sideways the previous day. This is on a 4 hour chart, and then it starts to pull back. Okay. So I would anticipate from its trigger here for the 4 hours, it gave you a nice juicy trigger, and which if on a 4 hour chart, it would have gave you a multiple day like entry, right? And it actually ran for multiple days, right? Definitely good for the pocketbook if you took that trade. But yeah, we're gonna be watching oil kind of close to see how the market reacts to that. Is oil basically people's demand for U.S. oil? How strong is it? Is the demand for the dollar via UUP? How strong is that? And that can be in a later video. But yeah, we definitely want to kind of keep you guys on the pulse of those things. Okay, so guys, it's your boy MC Fire
and Ice Cube.
We thank you guys for joining us, and you guys have a wonderful day. Goodbye.
Shalom.
Shalom. Peace.